Earnings before interest after taxes, EBIAT, is a financial metric that represents a company's net income before deducting interest expenses and taxes. It provides insight into a company's operating profitability by focusing on its core business operations, excluding the effects of interest payments and tax obligations. Key points about earnings before interest after taxes include: 1. Calculation. EBIAT is calculated by starting with a company's net income and then adding back interest expense and taxes. The formula for EBIAT is as follows: EBIAT equals net interest expense plus taxes. 2. Focus on operating performance. By excluding interest and taxes from the calculation, EBIAT focuses solely on the operating profitability of a company's core business activities. It provides a clearer picture of how well a company is generating profits from its primary operations, independent of financial leverage and tax considerations. 3. Usefulness for comparisons. EBIAT can be useful for comparing the operating profitability of companies within the same industry or sector. Since it removes the impact of financing decisions and tax rates, EBIAT allows for more accurate comparisons of operating performance across companies with different capital structures or tax obligations. 4. Decision-making. EBIAT provides valuable information for decision-making by management, investors, and creditors. It helps management assess the effectiveness of their operational strategies and identify areas for improvement in generating operating profits. Investors and creditors may use EBIAT to evaluate a company's ability to generate cash flow from its core business activities and assess its financial health. 5. Limitations. While EBIAT offers insights into a company's operating profitability, it is not a comprehensive measure of financial performance. It does not take into account non-operating income or expenses, such as gains or losses from investments, one-time charges, or extraordinary items. Additionally, EBIAT may vary depending on the accounting methods used by a company, making comparisons between companies challenging. 6. Relationship with EBIT. EBIAT is closely related to earnings before interest and taxes, which also focuses on operating profitability but excludes taxes. EBIAT goes a step further by also excluding interest expenses, providing a more comprehensive measure of operating profitability. In summary, earnings before interest after taxes, EBIAT, is a useful metric for evaluating a company's operating profitability and assessing its financial performance. By focusing on core business operations and excluding the effects of interest and taxes, EBIAT provides valuable insights for decision-making and comparisons within the business community.